Welcome, everybody, to our discussion on crafting your investment strategy, sponsored by the Cusick Group. My name is Joe Cusick, lead strategist here at the Cusick Group, and I want to welcome everybody for our discussion. Now, before I get started, I do have to read some disclosures. Securities and investment advisory services offered through AOS, which does business as Trading Block and Money Block, a registered broker-dealer, FINRA, NFA, SIPC member, and registered investment advisor. Options do involve risks and are not suitable for all investors. Please read the characteristics and risks of standardized options. That's available at the optionsclearingcorp.com website. You can also get the pamphlet at the bottom of all the screens under risk disclosure at www.moneyblock.com. Also, any stock, option, or future symbol that's displayed or discussed are for illustrative purposes only and are not intended to portray a recommendation to buy, sell, or hold any particular security or underlying asset. AOS, nor the Cusick Group, does not provide any tax or legal advice. Content and tools are provided for educational and informational purposes only, and the products and services are intended for U.S. customers and may not be available or offered in other jurisdictions. Now, many of you that are on today's discussion and are watching this video have likely been to a financial advisor before, and they've quite often used a subjective risk questionnaire based on psychological theory and not quantitative math. Now, this dominated the industry for decades, and only recently has a new option arose for more accurately assessing how to invest or how we should invest in something very important, and that is with your money. Now, subjectivity has perpetrated stereotypes in the past, and if you're really young, you must be chasing aggressive growth. That's what you quite often hear. Or if you're of retirement age, you must be extremely risk averse, etc., etc. You constantly hear that. The problem with these subjective risk questionnaires is that nearly, and I shouldn't say that, not nearly, is that they nearly always miss the mark. And at my practice, I want to utilize a much different approach. Now, I use math to pinpoint your exact risk tolerance. Now, we're going to use an award-winning technology that's based on a Nobel Prize-winning framework. And we're able to quantify your risk tolerance into a simple risk number between 1 and 99. Now, this is based on actual dollars that you have today to assess how much you're willing to risk or lose in exchange for an opportunity at a specific gain. This results in a quantified and objective outcome, which you are in charge of. If you think that the results are off, we have a more detailed approach that can help you drill down your specific comfort zone. Now, my approach boils down to 3 simple steps to help you identify your financial goals and meet your expectations. Unlike many of my competitors, this approach establishes that every decision we make is centered around building the right portfolio of investments for you. To capture your goals and objectives, we start with capturing your specific risk number. This analysis and report is called your risk fingerprint, and for a multitude of reasons has been often referred to by my clients as like their sleep number. After we pinpoint your exact risk number, then we analyze your current investments to see if they line up with your true risk and reward tolerance. We then tailor your current portfolio or build a completely new one to align with your new unique risk fingerprint. Now, finally, we want to look at the big picture and chart a clear and intuitive path towards retirement goals. And how we do this is just with a simple, intuitive questionnaire. Now, this is available either on your desktop or your mobile device. And what it will do is after you go through a series of questions, we'll fully analyze and clearly lay out in a very understandable way your risk tolerance. Now, after we've defined what that risk tolerance is through that number, and we have that risk number, we'll then look at your current portfolio and see what lines up with that true appetite of risk. Now, 4 out of 5 investors have more risk than they know. And more often than not, when I talk to a new client, I'm going to see a situation that is illustrated in this particular screen, which is the client's risk number is 54, but as we load up their portfolio that you're currently in, it's more like an 86. This means that it's time to reassess their investments and get them on the right track towards achieving not only their financial goals, but fit their risk tolerance, their objectives, their risk number. The good news is that even if your current investments are over or under leveraged for your risk tolerance, I will ensure you that moving forward, they will be in sync. Now, after talking more about your goals, objectives, hopes, and fears, I'll offer different financial advice which will match your risk tolerance before we purchase anything going forward. You will also be able to view your dividends, expense ratios, that are going to help you meet specific objectives. Now, once we get the portfolio risk aligned, we can now dive in a little deeper and look at the risk and reward components and have a visual on the potential of each investment opportunity that we're going to be put forth. Now, this is a tool that's very powerful and powerful enough to meet my needs and simple enough for you to understand without having to have a degree in mathematics. Now, my stress test right here is a very powerful tool. And this stress test is going to show how your portfolio would have fared during significant market environments over the last 8 years. So if you're worried about what happens if you have a 2008 crash, you're going to see it over here. You want to see what would happen and how your portfolio would actually react if you had a strong recovery year like 2013, you're going to have that right here. So this is a really neat and very powerful page that will show you in a variety of different dramatic market conditions how your portfolio could potentially react. Then we get to the final step, and this is the one that puts it all into context. This final step is for us to take a look at your long-term goals and come up with the strategy for your retirement using your current investment amount, your monthly savings, your retirement year, your monthly withdrawal amount. I can predict the amount that you will need to retire and what the probability of you achieving those results. Now, this is a big decision, and we don't have to decide this all at once, but the good news is that we can plug and play to instantly see how changes of any variable can affect your ability to meet your retirement goals. Now, I want to thank everybody for listening to today's video and interacting with us. And if you have any questions or you would like to have a free review of your current portfolio and get your risk number, please email me at jcusick@moneyblock.com. That is JCUSICK @moneyblock.com. I want to thank everybody for being on today and wish you a great trading day. Take care.